Good morning, everyone, and welcome to the Quantum Leap homework session, a pre-market analysis and trade plan setup for last day of the month, March 31st, 2014. It is a wonderful Monday. For those that are visiting us from Twitter or watching this on YouTube after the fact, I am Doug McKay. I am the founder and head moderator for Quantum Leap Trading. Quantum Leap Trading is a self-organized learning environment. We have a private Skype room that's been around over 4 years, and we come together each day to talk about the markets, talk about trading, talk about ideas, talk about life, and then each morning we come together in this live go-to where we go through our daily routine to get ready for trading. Now we do start with the macro to the micro. What you're going to see this morning is we're going to go through the key numbers, then we're going to go through the trend and look at where we are in the structure of the market, and then we're going to get into a little bit more in-depth chart analysis and then set up our trading areas and our targets for the day. So if you're watching this on YouTube after the fact, you might want to skip ahead. Although, because we're preparing for trading, we do not skip, we do not take shortcuts. There is no shortcuts in trading. So we do the same thing every day to prepare ourselves for trading. Before I get started, if you want to find out more about our trade room, you can send a contact request to my email at d.mckay@stealthtrader.com. or look for me on Twitter. I'm at Crazytoo, that's K-R-A-Z-Y-T-O-O, or you can send me a contact request on Skype. I'll be Doug_McKay, that's M-C-K-A-Y, and I'm from Windsor, Ontario, Canada. All right, so before we get started, I have to get the legals out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades and investments decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. Okay, so we're going to start with the key numbers and take a look at where we are within our numbers now. A couple things we've got to take into account this morning. A, we're at the end of the month, so you're going to get some window dressing, and my overall bias for today is a drift upward. So taking a look at where we are in terms of the areas that we've been looking for, well, we've got last month's close at 60.75, and we're coming up, I don't know if we're over it yet, but we're probably going to challenge that rate shortly. And then we've got the last month high at 66.50. And of course, the key number to keep an eye on whether or not we close above or below this 46. That is our month open, so whether or not we have a bullish or a bearish month. And of course, the very big number that we are battling and have been battling in this balance area is that 1837.75, which is our year open. Do we continue to have a bull year, or do we get into a bearish year? And of course, the big numbers above us are our RTH all-time adjusted high to the June contract, which is up at 1877.75, and then our adjusted all-time high at 1880.50 adjusted to the June contract, and then of course the big number is the 1887.50, which is the all-time high for the March contract. Those are the big macro numbers to pay attention to. Let's take a look at what happened on Friday. Friday's Globex session opened at 43.50. We had a high of 47.75 and a low of 41.50, and then we opened the RTH session at 46. We had an open drive. Now, you can argue that it wasn't an open drive because we did get a little bit of a rotation down. So, you can go with an open option in range or an open drive, whichever you prefer. We stuck with an open drive because I thought the move was powerful enough, although Neil from Trade the Markets made a good argument to convince me that you could go with an open, I would even say more of an open test drive than an open option in range. We did not break the IB to the high side or the low side, so we have a neutral day. Something to keep an eye on is neutral days have a tendency to create neutral days following them. So we should be seeing a rotational day. I think we're going to see a rotational day with a little bit of an upside bias. Our opening swing high, 48.25. Opening swing low, 45.25 for a 3-point opening swing. And the initial balance high, 58. Initial balance is simply the first hour high and low. 58 high, 45.25 low for a 12.75. Now here again is what we've been talking about, that we've been seeing a lot. The average initial balance is usually between 6 and 9 points, and lately we've been getting these really big initial balances. Why? Well, the bulls and the bears are battling it out right now, and we've got a pretty wide balance area that we're going to look at on the composite. And as they struggle for whether or not they keep this above 37.75 or below it, is we've got some really big battle going on. That's where you're going to see that your ranges are going to expand. Your value areas are going to expand. Your initial balance especially is going to expand. Of course, on the intraday numbers, we had all higher numbers, higher 1230 number, 5250. Higher high 59.50, higher low 45, higher close 50.50. This 50.50 keeps coming back into play. We're going to take a look at it. And then the RTH VPOT shifted up back higher at 56.50. And ranges for the 20-day ATRs have tightened up slightly in the last couple of days. Just over 17 in the 20-day for the RTH, just over 20 for the full session, and just under 10.75 for the Globex. And then you can see that we had a higher value area high, and again, a pretty wide value area at 10 points. So high value area 59, low value area 49, and then we broke the IB to the high side. I thought you said we had a neutral day, Howard. Well, we'll take a look at that on the chart. And then our volume was basically pretty normal. Now let's just take a quick look, because I got to sneak at this to see if we made a new high. We did 61.50. So let's go over to the daily report. Maybe I changed that to 1861.50. And so our 20-day, and this is likely to change again, but our 20-day ATR targets right now to the upside 1875, and to the low side 1841.50. And that's likely to shift some more. In terms of news, we have Chicago PMI at 1840 or 8:45 Central. So keep an eye on the open and be careful in that first 15 minutes. And then the big one is going to be 9:55 Fed Chair Yellen, and that could cause some reaction in the market. So just watch those two time frames. I want to take a quick look at the COT report. Kind of an interesting development on the Commitment of Trader reports. We've been talking about the fact that retail small spec were net long, and then the large spec and the commercial papers was net short. Now we still have commercials and large spec. Large spec is basically right at the neutral line, but you can see we had a big move down on the retail, and retail has started to get net short. So kind of interesting. Leads me to believe that we're going to get a little bit of move up higher again as they take the early fake out, and we're likely to get a push up. And again, my long-term or mid-term hypotheses is we still have an unequalized high at 1777.75. Sorry, 1877.75, and that 1880.50 needs to be equalized, and I think that they're going to equalize the June and the March contract, and they'll take out that 1887.50 as well. That's what my hypothesis. I don't know if it's going to happen, but it's what I'm thinking. So let's go and take a look at the macro to the micro in terms of the trend. See where we are in this trend. You can see that on the monthly, we've got good slope, we've got good separation. We're trading in the upper distribution and above, getting above last month's high. and we've got good slope and separation on the 9 EMA and the 20 SMA. The trend is very much intact on the weekly. Same thing on the monthly. We saw a little bit of weakness, but we popped back up above the 9. We're holding the 9, and we're getting slope and separation on the weekly. So the weekly is still fully intact, and the trend is still to the upside. On the daily, a little bit of a different story as they battle it out here, back and forth, but we are trying to get above and hold above the 9 and the 20, and really just a consolidation period here, and we're likely to get a big move off of this in one direction or the other. Taking a look at the geometric chart, a couple interesting things on here. There's four Andrew pitchforks on here. There's the long-term fork, which are these 3 lines right here. We've been watching this long-term fork for quite a while. And then there's an intermediate red fork here, which is also an upward sloping fork. And then I have 2 opposing forks, one that we added in a while ago, a couple weeks ago, and then I just added this new one, and I modified it, and it's got an interesting energy point right here, which is up at 1870.75. That would be my upside, target today. Is up there at the 1870.75, 1871 area. And if you remember, we were talking about that all last week, that 71 area. And then, of course, we're trying to get back inside of the long-term upward sloping fork, and we're currently trading inside of it right now. But if we do break down below it, then you might want to look for a move down into that 1838 area, or more specifically, I'd be thinking the 1839, that key CLVN that is below us, that is really defining for me on whether or not we go down and attack that triple distribution area in the composite. Let's go take a look at the trends coming into the intraday trends coming into the market this morning. You can see that the 4-hour again doesn't give us much. We're basically chopping around and consolidating. We do have a move up right now and currently trading in that 1861 area, and that 1862.50 I think is in danger of getting hit even before the Globex is open, the RTH is open. Do have a naked cross here at 1850.50. That's a key area. We're likely to come back down and test that in the next trading session or two. Doesn't have to be this particular trading session, but we are leaving a naked cross on the 4-hour at 1850.50. Going into the 30-minute, same thing. We basically had consolidation, but we get this big pop-up. So, we're creating a bit of a technical gap against the 9 EMA, and I would think that we'd get a rotation, and that's why I think we get a rotational day with an upside bias. And then going down to the 5-minute, you're going to see that the trend is intact. We do have this technical gap that we're creating against the 9, likely to come back down and close that technical gap. But we are getting some slope and separation. So the short time frame is showing us that we're getting a bit of a beginning of a trend showing up. Let's take a look at the big picture on the composite and start taking a look at where we are. Of course, we're in this big balance right now. This looks a little bit convoluted right now, but let me just walk you through it. And you can see that I'm starting my larger microcomposite, starting from the 21st of February through to Friday, the 28th of March. And the overall most accepted price or most traded price is up here at that 64.50. Then there I have the the balance once we broke back up here and came back to to test this balance area again. We've been chopping back and forth, and again the microcomposite that runs through from March the 17th through to Friday, we're getting agreements in value, and value is still left above up here at 64.50. That's why my overall hypothesis is still long. We left value up to the upside. We came down, and we came down to where this all started, down here in around this 3450 microcomposite VPOC down here, came down and tested it down here, accepted value slightly higher up at the 4175 area, and then went up. And then every time they came up here, the seller stepped in and took us down. And we came back down one more time down to the 3450 on Thursday, and then we made the move up on Friday, and we continue to make this move up. We had a 5-point gap. We closed the session on Friday at 1850, and we opened on Sunday night at 1855. And from Globex, we had a very tight range in Globex overnight that is just expanded. But for the most part, we were in a 3-point range, 3.5-point range around that 5750, Globex VPOC before we got news, and GDP must have been good for Canada, and we popped up, and now we're testing, the highs in the Globex. So what I'm looking at right now is there's going to be a couple key areas, and I think I'm moving my my line in the sand right now up a little bit higher at 1859.50. Only reason I'm doing that is because we've got this 1850.50 that we've got to pay attention to with 1855.25 as a key CLVN. But as long as we stay above 1859.50, you got to be looking long. We're going to be outside of range and outside of value from Friday, and we're inside of the the value area from the smaller microcomposite that's trading at 1848.50, and the 64 is going to act as a major magnet now that we're back up here again. And I think the fact that we're coming into the end of the month and we're going to see some window dressing, you've got to be looking for a rotation back up to 1864.50 and possibly higher. Remember, we're now trading above last month's close. Last month's high is the 66.50, which is right here. You've got the value area high for the for the smaller microcomposite that runs from the 17th through to Friday. The value area high is 66, and then the overall value area high for this larger microcomposite that goes from the February 21st till Friday is 67.50. And then right in between that, you've got last month's high at 66.50. So I think they're going to go for those levels today as long as they come up and accept 64.50. And then above that, you've got that 71 area again, the 70.75, and if we get above this CLVN at 70.75, I think you see a move to 73 and then a push up to test those unequalized highs at 77.75 and 80.50. If we get below 59.50, then we're likely to come back inside of our Friday's range, get back into value, and rotate back down to the 50.50 area, where I'm thinking that they'll come down to try to pick up buyers. And then if we get below that, then they're going to, the 48.50 is the value area low for the smaller microcomposite. I think we come down and test that 46. Remember, this month's open was 46. And we've got a key CLVN here at 46.75. We've been watching this area. This should be no surprise for anybody that's been in the homework sessions in the last couple of weeks. And then if we get below 46.75, then you got to look at that 41 area and a test of the value area low. And the value area low, the overall value area low, is right there at that 39.50, which is that key area at 39 CLVN. And below that, then we've got this move down, which eventually it's going to happen, is we're going to come back down into this triple distribution area. This is undetermined fair value down here. We've come down and tested the 34.50 area several times now. I think if they come back down here again, we're going to come down and test this 29.50 and 25.25 and get stuck in this area for a few days as we determine and mature the auction down in this distribution. I just don't think it's going to be today. I think today is our low side is going to probably be the 50-50, if not a push down to test the other side of balance down here at this 46.75. But let's take a look at what our overnight and our intraday charts are going to set up for. Of course, we're trading outside of range from Friday and outside of value. Value area high from Friday is this 59, and the range high is 59.50. So we're going to get a open auction out of range as long as we stay up here, and we're going to be outside of value. And so what's the first thing we got to look for when that happens? Initiative buyers stepping in and just taking us up and ripping us to the upside, and with the first target being that 62.50 if we don't hit it even prior to the RTH open. So currently right now we have a double top here at 61.75. It's a weak high. It's not going to hold. I can tell you right now it's going to get taken out. Just we got to watch for a rotation to come back down and test this value area high and the range high from Friday. So let's put our numbers in. This is likely to go higher, but 61.75 is our current Globex high. Our Globex low right now is 55. And then our VPOC for the night, which I don't think is going to shift, is going to be 57.50. All right, so how do we trade this? Well, 59 is going to be the key area. Let me get rid of this so I can get our Globex, our composite up here. So we've got this 59.50, which is the range high, but it's really the 59 that I'd be looking for. So that would be a trade area for me. And I'm going to put it right in the middle there because you've got to wait for a break inside of value. We're likely, if we come down and test the range high at 59.50, we're likely to test the 59 value area high, and that's where I'd be looking for responsive buyers to step in. If they don't step in, then look for the overnight VPOC and Friday's naked VPOC to be taken out and a move down to test this 55. Remember, 55.25 is the CLVN right here. And I think that you'd likely come down and take out the overnight low, so it's really 55. And that's going to be a trade area because I'd be looking for buyers to step in around this area. So it becomes a target and a trade area. And then below that, you've got the key CLVN down here. I'm sorry, key LVN down here, and a CHVN, this 50-50 again. And you've got the close from the naked close down here from Friday at 50-50. So this is going to be the main target below. With the other side of balance being down here at 46.75. And then you've got the range low down here at 45.25 from the, is it 45? Or, I'm sorry, it was 45 as the immediate target below that. Come on, work with me here. And then the extended target below is going to be this naked close that we had from Thursday at 41, and the naked VPOC from Thursday at 42.25. My system seems to be working a little bit slow this morning. And I don't think we get much lower than that, but the other side of balance there and the key line in the sand, I think for further rotation down is going to be in that 39, and then of course you know that 3450 is going to be your secondary extended target down here, and that you know, started the triple distribution down here and where we went down to pick up buyers before. But I don't think we get that low today. So I'm not really worrying about that. So above us, we've got our initial target just above at 62.50. Our main target above is going to be that 64.50 microcomposite VPOC. And then the 66.50, which is our last month high, is going to be a secondary target and an area that I'll be looking for responsive buyers or sellers, I should say, to step in. And then targets above that, of course, are going to be 71. We'll put it at 77 because 70, 75. And then you've got the 73 naked VPOC, and then the big area above us is going to be that 77, 75. RTH all-time high, and then the 80.50, which is adjusted all-time high. And these are numbers that should be no surprise that anybody's in here. The problem that you get above the 70.50 and once we come up around to that 73 is there's really nothing you know, to fade against up here. So if we get into a afternoon drift, a end of month drift, don't try to fade this. Okay, the highest that I would try to fade it would probably be the 66.50, and simply because you get value area sellers stepping in there. But once we get above and we accept 64.50, you really want to remain and take advantage. You know, you should be long before we get into that, of course, but you want to just take the afternoon and the month-end drift up to these higher numbers. Don't try to fade. I think the retracements, if we get above there, we're likely to get into some type of a bit of a trend upwards, and you don't want to fade it. So again, we're going to open up out of range, out of value, and the first target above. Watch on the open, see if they come down and test this 59 area. Watch for responsive buyers. If they come down at this 59 area and then they break back above 58, 59.50, I'd get long into the overnight high and the takeout of the 62.50. If you see initiative buyers stepping in here and they're starting to get no rotation on the open, just get long into the 62.50. Just make sure you're in and scaled by 52.50 and hold one for the move up towards 64.50, and I'd be trying to hold long most of the day. Of course, with Yellen, if Yellen comes in at 9:55 Central and says something, you know, to the negative side, you know, we could get the rotation down and take out these lower numbers and come down and test this 46.75. So that's what I'm looking at in terms of my main hypotheses, and let's take a look at what we look like on the Keltner. So right now our Keltner center line is 56.50, and we're above it right now. A test of the upper Keltner will take us up to 63.50, and I'd likely say that's going to be 64.50 by the time we get there. So definitely looking strong coming into the open. Below 56.50, then you've got to look for a rotation down to test the lower Keltner, and by the time we get there, it's going to be in this area of 50.50 in the takeout of the naked close from Friday and the LVN from this double distribution day. The other thing I wanted to show you, and we talk about this all the time, is we had the double distribution. It was really almost a triple distribution on Thursday, and on Friday I mentioned that this area right in between this 56 and this 59, separated the two distributions, and anytime you get a double distribution, you usually get a retest of the both sides of the distribution. We certainly clearly auctioned the lower distribution. We couldn't quite make it into the upper distribution on Friday, so one of the reasons why my bias is to the long side is you have a high probability of going up and taking and auctioning this upper distribution. And Howard, I just got to make a change on your sheet. It wasn't a neutral day on Friday. It was a oh, I'm sorry, it was a neutral day. Sorry, they broke it to the both sides. I didn't think they broke the low sides. I am corrected, sir. So it is a neutral day. So, I mean, you've got to look for a rotational possible neutral day as we come up in here and just chop in this upper distribution with the upward push to that 66.50, and then if we can break above that into those upward targets. Taking a quick look at gold. We had a beautiful tech gap, Mr. Sneaky, on gold earlier. I mentioned I came on here early to get people to the long side. Come on. What is going on with my? There we go. All right, so we have this cup and handle. We're currently below 1,300. Anything below 1,300, I'm still looking for a push down. This handle can come all the way down into the 1258 area, which is a key CHVN. 61.8 is 61.3, but Bukulski uses 65, so we can come down to that 58 area for remaining with keeping this cup and handle validated. Now, as long as we stay above 58, you want to watch for the breakout above this 1400 right rim, because if we get above there, the cup and handle measure move is up to 1600, and that's a big move, and I'm going to be in this this move once we get there. But I took the, as we were talking last week, take the short below 1300. Actually, it was below 1306 into 1300. It was a nice short, and overall, you got to be looking short right now and continuing to stay short below 1300 until we come down and test this area. Now, if we get below it, let's just bring up the composite for gold. Right now we're trading in this minor CHV or minor microcomposite VPOC, which is trading in around this 1294.50 area. We came down to this prior, which was one of our first targets below us once we broke 1300, which was that that 1293 area. If we stay in this area, you want to watch for a break above 1300. If we get above 1300, look for 1304, and then that 1306, and then the 1311 area. And that would close out the tech gap that we've got on the daily and come up and test the 9 EMA on the daily. But if we stay below this 1300, look for chop around here. But if we break below this 1288.80, I'm sorry, 1288.40 area, look for a move down to the next target below, which is at 1282 area. Then we've got the 1274 and then 1265 with the 58.70 being the the big distribution in between that 1258 and that 1261, which is right in this balance area right here. And then of course if we get below 1255, then the cup and handle is invalidated, and we're likely to see a bigger move down to this 1240.80, which is where this all started from before we launched to the upside. And I think if we come down to this 1240, we're actually going to see a test of the the 1100s again. But until we break below that 1258, I'm looking for this handle to be formed, and then a rotation back up and a break above 1400 for a much bigger move up. So that's what I'm looking at. Oh, Howard, I did it to you again. I talked too much and went too long. We're just 20 after. Do you have anything quick you want to go through?
I think we'd probably just wrap it up here.
All right. So this is going to conclude our morning homework session for Monday, March 31st, last day of the month, 2014. As always, trade well, trade safe, and we will catch you on the flip side.